350 years ago, in the heart of London, a quiet revolution took place that would forever change the world of finance. This is the story of how the Bank of England was founded to fund a war, and its enduring impact on our modern financial system. Imagine it's 1694. You're an ordinary citizen of London, going about your daily business, when suddenly you hear whispers of a new institution taking shape, a bank unlike any other. It promises to bring stability to the chaotic world of finance and help fund the country's war efforts against France. But what was this mysterious Bank of England, and how did it come into being? The answer lies in the aftermath of the Glorious Revolution of 1688, which saw the overthrow of King James II by his daughter Mary and her husband, William of Orange. With a new monarchy in place, the government found itself in dire need of funds to prosecute the ongoing war with France. Enter the Bank of England. Founded by a group of wealthy merchants and goldsmiths, it was granted a royal charter to lend money to the government at interest. In exchange, the bank was given the power to issue notes backed by gold, creating a stable currency that could be used for trade and commerce. This innovation may seem commonplace today, but at the time it was revolutionary. It allowed the government to borrow vast sums of money quickly and easily, without relying on the whims of individual lenders or foreign powers, and it set the stage for the development of modern central banking, with its emphasis on stability, liquidity, and public trust. Over the centuries, the Bank of England has played a pivotal role in shaping our global financial system. From its early days as a war finance vehicle to its current status as one of the world's most respected central banks, it has weathered countless storms and emerged stronger than ever. But what exactly is the Bank of England, and how does it work? How has it evolved over time, and what lessons can we learn from its history? These are the questions we'll explore in this episode of The Money Trail. So stay tuned, and let's dive into the fascinating story of the Bank of England. The Bank of England, one of the world's oldest and most respected central banks, has a fascinating origin story that dates back to the late 17th century. During the reign of King William III, England found itself in a precarious financial situation due to a series of costly wars, including the 9 Years' War against France. King William III needed vast sums of money to finance these conflicts, but the English treasury was nearly empty. The king turned to a group of wealthy merchants and bankers who agreed to lend him the necessary funds in exchange for certain privileges. This marked the birth of the Bank of England in 1694, with a capitalization of $1.2 million, a colossal sum at the time. The new bank's charter granted it several unique advantages, including the power to issue banknotes and lend money to the government at interest. These privileges allowed the Bank of England to become the primary source of financing for the crown, effectively establishing a powerful alliance between the monarchy and the financial elite. However, this arrangement was not without controversy. Many critics argued that it created an unhealthy dependence on debt financing, saddling future generations with the burden of repayment. Moreover, the bank's privileged status sparked resentment among those who lacked access to its lucrative benefits, fueling tensions between the haves and have-nots. Despite these concerns, the Bank of England proved instrumental in stabilizing England's war-torn economy. By providing much-needed liquidity and ensuring the government's solvency, it helped pave the way for England's emergence as a global superpower. Today, the Bank of England continues to play a vital role in shaping the nation's financial landscape, serving as both the central bank and the lender of last resort. While its origins may be rooted in war and debt, it has evolved into a cornerstone of economic stability, a testament to the resilience and adaptability of our financial institutions. As we delve deeper into the history of the Bank of England, we'll explore how it has navigated countless challenges, from financial crises to political upheaval, and learn valuable lessons about the delicate balance between power, privilege, and public trust. 1694, a pivotal year for the British Empire. The 9 Years' War, waged against Louis XIV of France, was draining the kingdom's coffers. England stood on the brink of financial ruin. King William III needed funds to finance his war efforts, but the existing system couldn't cope with such demands. This crisis set the stage for a radical solution, the establishment of the Bank of England. At that time, money lending was primarily handled by goldsmiths who issued promissory notes backed by their gold reserves, effectively creating an early form of paper currency. However, this system proved inadequate during wartime when sudden, massive capital requirements arose. Enter Scottish entrepreneur William Paterson with his innovative idea to establish a central bank that could issue government bonds and provide much-needed liquidity. Paterson proposed that investors buy shares in the new Bank of England, which would then lend $1.2 million to the government at 8% interest. In return, the bank would receive a royal charter granting it exclusive rights to manage Britain's public debt and reap profits from its investment activities. The proposal sparked intense debate among parliamentarians, merchants, and scholars about the potential implications of such an institution on national wealth, sovereignty, and stability. Critics argued that creating a central bank would concentrate too much power in private hands, potentially leading to corruption or mismanagement. Supporters countered that it was necessary to ensure economic survival amidst warfare. Despite opposition, Paterson's plan prevailed. On July 27, 1694, the Bank of England was officially born when Queen Mary II granted her royal assent to its creation. Initially headquartered in a small house near Threadneedle Street in London, the bank began operations with a staff of just 19 clerks. However, the true test lay ahead. Could this fledgling institution stabilize England's tumultuous finances and fund the ongoing war against France? The stakes were high, and the future of both the Bank of England and the British Empire hung in the balance. The year was 1694. England was in the throes of a devastating war against France, draining its treasury at an alarming rate. The nation's financial system teetered on the brink of collapse, with investors skittish and credit hard to come by. It was in this climate that the idea of a central bank took root, an institution that could stabilize the economy and finance the war effort. Enter William Paterson, a Scottish merchant and adventurer who had made his fortune in the East Indies trade. Paterson proposed a radical solution, a national bank that would lend money to the government, backed by the credit of the nation itself. The idea was met with skepticism at first, but as the financial situation grew more dire, it gained traction. On July 27, 1694, the Bank of England was officially chartered. With a capitalization of $1.2 million, a staggering sum at the time, it began operations in a small house near Threadneedle Street in London, with a staff of just 19 clerks. The bank's first major test came in 1697, when the war against France finally ended. The government faced a mountain of debt, and the Bank of England was called upon to help shoulder the burden. It did so by issuing bonds, essentially loans that paid interest to investors, which raised millions of pounds and allowed the government to begin paying down its debts. But the bank's role went beyond mere lending. By serving as a lender of last resort, it provided much-needed liquidity to the economy, helping to prevent panics and crises. And by setting interest rates and regulating the money supply, it helped to maintain stability in an era of rampant inflation and currency devaluation. Over time, the Bank of England became an increasingly powerful institution, with a hand in everything from foreign exchange to military financing. It weathered numerous crises, including the South Sea Bubble of 1720 and the Napoleonic Wars of the early 19th century, and emerged as a cornerstone of the British financial system. But it all began with a simple idea that a central bank could help to stabilize an economy in turmoil and provide the financial firepower needed to fund a war. It was a risky proposition, but one that would ultimately pay off handsomely for England and for the world. The year was 1694, and England was in the throes of the 9 Years' War, a conflict that had dragged on since 1688, draining the country's resources and leaving its economy in shambles. King William III needed funds to finance his military campaigns, but the traditional sources of revenue, taxes and loans from wealthy merchants, were no longer sufficient. Enter the Bank of England, a fledgling institution that had been founded just 2 years earlier with the goal of stabilizing the country's currency and providing a more reliable source of credit. The bank's founders, a group of prominent businessmen and politicians led by merchant Sir William Phipps, saw an opportunity to put their new creation to the test and to make a handsome profit in the process. The deal they struck with King William was simple. In exchange for a loan of $1.2 million, the bank would be granted a royal charter, giving it a monopoly on the issuance of banknotes in England. This would not only provide a steady stream of income for the bank's shareholders, but also help to stabilize the currency by reducing the number of private banks issuing their own notes. But there was a catch. The loan was to be repaid with interest, meaning that the bank would ultimately earn far more than the original sum. In fact, over the course of the war, the Bank of England made a staggering profit of $2.8 million, a full 130% return on its initial investment. This windfall not only helped to fund King William's military campaigns, but also established the Bank of England as a major player in the world of finance. Over time, it would evolve into a central bank, providing critical financial services to the government and the broader economy. Today, the Bank of England remains a cornerstone of the British financial system, with assets totaling over $500 billion. But its roots can be traced back to that fateful decision in 1694, a decision that not only helped to fund a war but also laid the groundwork for the modern central bank. The creation of the Bank of England in 1694 marked a pivotal moment in financial history. What started as a means to fund a war has since evolved into one of the most influential institutions in global finance, with assets totaling over $500 billion today. The bank's establishment allowed for the centralization of financial power and became an early model of modern central banking. It provided critical services such as managing the national debt, regulating the money supply, and ensuring the stability of the British economy. This institution would become a cornerstone of the country's economic growth and influence throughout the ensuing centuries. The Bank of England served as a catalyst for other nations to adopt similar central banking systems. Its structure and practices influenced the establishment of the Federal Reserve in the United States, the Banque de France, and many others around the world. As these institutions took shape, so too did the global financial framework that we know today. The bank's role in shaping international monetary policy cannot be overstated. In 1944, during the Bretton Woods Conference, the Bank of England played a significant part in establishing the gold standard and fixed exchange rates among major currencies. This system, which lasted until 1971, anchored the global economy to a relatively stable framework that fostered economic growth for decades. However, the bank's influence hasn't always been without controversy. Critics argue that its actions during times of crisis, such as the 2008 financial meltdown, have disproportionately benefited large financial institutions at the expense of taxpayers and smaller businesses. The bank's response to these crises has raised questions about transparency and accountability in its decision-making processes. Nevertheless, the Bank of England remains a powerful force in global finance. Its decisions continue to reverberate through the world economy, shaping monetary policy and influencing financial markets. The legacy of this once wartime funding mechanism lives on, underscoring the far-reaching consequences that financial institutions can have on economies across the globe. The Bank of England, a venerable institution that has stood for over 3 centuries, is no stranger to controversy. Critics argue that its very founding was mired in questionable practices and dubious motivations. Established in 1694, the bank was created to fund a war against France, which had become an existential threat to England's sovereignty. The English government, strapped for cash, turned to investors, offering them lucrative incentives in exchange for their support. This scheme involved issuing government bonds, essentially IOUs that promised to repay the principal and interest over time. These bonds were sold to private investors, who formed the Bank of England as a joint stock company. The bank agreed to manage the government's debt, effectively becoming the nation's central bank. However, this arrangement raised concerns about conflicts of interest and undue influence. By managing the national debt, the Bank of England held significant sway over the government's financial policies. Moreover, the bank was not subject to the same level of public scrutiny as other government institutions, leading some critics to accuse it of operating behind a veil of secrecy. These concerns were exacerbated by the fact that the Bank of England's founders stood to profit handsomely from their investment. The interest rates on the government bonds were high, and the bank's stockholders received dividends based on the profits generated by these investments. This raised questions about whether the bank was acting in the best interests of the nation or simply seeking to enrich its shareholders. Despite these concerns, the Bank of England continued to grow in power and influence. Today, it is one of the most respected central banks in the world, responsible for managing the country's monetary policy and maintaining financial stability. However, the legacy of its founding lingers, serving as a reminder of the complex relationships between governments, financial institutions, and private investors. As we continue to uncover the money trail, it becomes clear that the Bank of England's story is one of power, profit, and the enduring influence of financial institutions on national policies and global economies. 300 years on, the Bank of England remains a cornerstone of the global financial system. Its creation in 1694 to fund a war against France has left an indelible mark on our understanding of central banking and its role in modern economies. The establishment of the Bank of England marked a significant shift in how wars were financed, moving away from direct taxation towards public debt. This innovation allowed governments to borrow heavily during conflicts, thus avoiding unpopular taxes that could trigger social unrest. However, this system also created new opportunities for profit-driven investors who willingly purchased government bonds, often at exorbitant interest rates. Today, many central banks follow a similar model, managing public debt and ensuring monetary stability. Yet, the legacy of the Bank of England serves as a reminder of the complex relationships between governments, financial institutions, and private investors. The line between public service and private gain can blur when such institutions are tasked with both facilitating economic growth and generating profits for their shareholders. Consider the 18th century South Sea Bubble, one of history's most infamous financial bubbles, which was directly linked to the Bank of England. Speculators drove up the price of shares in the South Sea Company, hoping to cash in on lucrative trading rights granted by the British government. When the bubble burst, thousands lost their fortunes, and the Bank of England had to step in to restore stability. This example underscores a crucial lesson. Financial systems are not infallible, and even central banks like the Bank of England can be vulnerable to market manipulations and speculative frenzies. As we navigate our way through the 21st century labyrinth of high-frequency trading algorithms and cryptocurrencies, this lesson resonates more than ever. In conclusion, the story of the Bank of England is a testament to the enduring influence of financial institutions on national policies and global economies. From its inception as a wartime funding mechanism to its evolution into a bulwark against economic volatility, the Bank of England has left an indelible mark on financial history. As we delve deeper into the money trail, let us remember that understanding this intricate history is key to shaping a more stable and equitable financial future for all.